What is going on, everyone, and welcome back to the channel. I'm your host, and today is June 16, 2026. We have got a fascinating market session to break down for you today. We've got a fintech name breaking out to the upside, a streaming giant hitting deeply oversold territory, a semiconductor icon pulling back hard, and a legendary chip designer sitting at levels that would have seemed impossible just 1 year ago. Whether you're a trader looking for short-term setups or a long-term investor hunting for value, today's top 5 stocks have something for everyone. Let's get right into it, starting with number 1. Alright, kicking things off with UnitedHealth Group, ticker UNH, trading right now at $408.49. Now I want to flag something immediately. We don't have a clean percentage change for today's session, which suggests some data irregularity, potentially a halt or a late open situation. But let's focus on what we do know, because the story here is extraordinary. First, the 52-week range. UNH hit a low of $234.60 over the past year and a high of $415.98. That means this stock has nearly doubled off its lows. That is a 74% recovery in under 12 months for a company with a market cap of nearly $371 billion. That is not a small cap speculative play, that is the largest health insurer in the United States clawing its way back. Now let's look at the technicals. The current price of $408.49 is essentially sitting right on the 200-day simple moving average of $408.48. That is textbook. The 200-day SMA is the single most watched long-term trend indicator on Wall Street, and UNH is trading right on that line. That creates a critical inflection point. A sustained close above $408.50 with volume confirmation would be very bullish. A rejection here sends it back toward the mid-$380s. The 6-month high is $410.65, meaning we are just about $2 away from the top of the recent 6-month range. Volume today is only 2.49 million shares against an average of 4.24 million. That's a volume ratio of just 0.59, meaning conviction is low today. Institutions are not piling in aggressively at this level, which tells me the market is being cautious right here at the 200-day. The PE ratio is 30.76, which is reasonable for a company of this quality and scale, especially in the healthcare sector. I want to see UNH break above $415, its 52-week high, on strong volume before getting aggressive. But if you're already holding, this is a level to watch very closely. Next up, and this is the most exciting name on our list today, SoFi Technologies, ticker SoFi, up 4.87% on the session trading at $17.97. Volume is absolutely screaming here. 82.9 million shares have traded today versus an average of 72.8 million. That's a volume ratio of 1.14, meaning this move is happening on above-average participation. When you get price and volume moving together like this, technicians call that a confirmed breakout, and that is exactly what we are seeing. Let me walk you through the moving average picture because it is almost perfect. The 20-day SMA is $16.64. The 50-day SMA is $16.89. And the current price is $17.97. SoFi is trading above both its 20 and 50-day moving averages, which means the short and medium-term trends are pointed higher. The 200-day SMA is at $17.95, which is essentially the current price, and holding above that level on a closing basis today would be a massive technical signal. The RSI is at 59.6. Now for those of you who are newer to technical analysis, RSI stands for Relative Strength Index. It runs on a scale of 0 to 100. Readings below 30 are considered oversold, a potential buy signal. Readings above 70 are overbought, a potential sell signal. At 59.6, SoFi still has room to run before hitting overbought conditions. That is a green light for momentum traders. Now the 52-week range tells an important story too. The low is $14.23 and the high is $32.73. We are currently at $17.97, meaning SoFi is still sitting 45% below its 52-week high. There is significant upside if the fundamental narrative holds. The 6-month high is $29.28, so if this breakout continues, the first major target is the $21 to $23 range, and then we look toward that $29 level. The PE of 39.9 is elevated but expected for a high-growth fintech. SoFi is my top pick on today's list. Alright, now let's talk about Netflix, ticker Netflix, down 4.02% today at $78.39. Volume is heavy at 44.1 million shares, well above the average of 37.1 million. That's a volume ratio of 1.19. When a stock drops hard on above average volume, that is typically distribution, institutions selling. But here is where it gets interesting, and why Netflix may actually be one of the most compelling contrarian setups on today's watchlist. Look at the RSI, it is sitting at 20.2. 20.2. Folks, anything below 30 is considered oversold, and 20 is deeply, deeply oversold. This is the kind of reading you see at major bottoms. It doesn't mean the stock can't go lower, oversold can stay oversold, but statistically, RSI readings this extreme are historically associated with mean reversion bounces. Now let's look at the moving averages, and they paint a clear bearish picture. The current price of $78.39 is well below both the 20-day SMA of $84.24 and the 50-day SMA of $90.10. Netflix is in a clear short-term downtrend. The 52-week low is $75.01, and we are only about $3.40 above that level right now. The 6-month low is $75.86. So we are approaching a critical double support zone in the $75 to $76 range. The 52-week high was $134.12, meaning Netflix has lost nearly 42% from its peak. That is a painful drawdown for a company with a $330 billion market cap. The PE ratio of 25.29 is actually quite reasonable for Netflix. In fact, it's the lowest valuation this stock has traded at in years on an earnings basis. For traders, the setup is this: the $75 to $76 zone is make or break. A bounce from there with volume could be a powerful short-term trade. A breakdown below $75 opens up the potential for a move toward the low $60s. I would not chase this lower, I would set an alert at $76 and watch the price action very carefully. Number 4 today is Intel Corporation, ticker Intel, down 6.8% on the session, trading at $119.16. Now, before anyone panics about that 6.8% drop, I need to put this in context, because the Intel story in 2026 has been one of the most stunning comebacks in semiconductor history. Look at this 52-week range, a low of $18.97 and a high of $132.75. Intel was an $18 stock less than a year ago. Today it's trading above $119. That is a 528% gain from the 52-week low. Whatever has driven this revival, whether it's AI chip wins, manufacturing contracts, or a strategic restructuring, the fundamental narrative has clearly shifted dramatically. Now let's look at the technicals. The 20-day SMA is $115.19 and the 50-day SMA is $98.61. Intel is trading comfortably above both those moving averages despite today's 6.8% pullback, which tells me this is more likely healthy consolidation than a trend reversal. The 200-day SMA is at $119.28, almost exactly where the price is right now. Same story we saw with UNH. Intel is testing its 200-day moving average. This is the level to defend. Volume today is 92.3 million shares versus an average of 137.7 million. The volume ratio is just 0.67, meaning today's sell-off is actually happening on below-average volume. That is an important nuance. Heavy selling on light volume is less alarming than heavy selling on heavy volume. Institutions are not aggressively dumping shares here. The RSI at 48.4 is essentially neutral, not overbought, not oversold. Intel has room to go either direction. The 6-month high was $129.44, and I believe that is the first meaningful resistance level to watch on the upside. The PE ratio shows 0, which typically indicates negative or non-standard earnings, something to investigate further before initiating a new position. But from a pure chart perspective, holding the $115 to $116 zone keeps the bullish structure intact. And finally, rounding out today's top 5 is Advanced Micro Devices, ticker AMD, down 5.77% today at $515.66. Now I know what you're thinking, down almost 6% sounds scary. But let me show you why AMD might be the single most impressive stock on this entire list when you zoom out. The 52-week low for AMD was $125.77. It is currently trading at $515.66. That is a 310% gain in under 12 months. AMD has become an absolute powerhouse in the AI accelerator and data center GPU market, and the market has rewarded it accordingly. The market cap is now $840 billion. AMD is closing in on becoming a $1 trillion semiconductor company. That is extraordinary. Let's break down the technicals. The 20-day SMA is $492.88 and the 50-day SMA is $399.29. AMD is trading well above both. That's a very healthy technical structure. Even after today's 5.77% decline, AMD remains in a strong uptrend. The 200-day SMA is $515.93, which is essentially the current price. Once again, we are watching a stock test its 200-day moving average. This is a theme across today's market. The RSI is at 53.1 right in neutral territory, meaning AMD is neither overbought nor oversold after this pullback. Volume today is 18.1 million shares against an average of 28.3 million. Volume ratio of 0.64. Again, this sell-off is happening on below-average volume. That is a bullish divergence signal. Sellers are not especially aggressive. The 6-month high was $547.26 and the 52-week high is $558.37. The PE ratio of 171.32 is extremely elevated, reflecting the enormous growth expectations priced into AMD. This is a momentum and growth story, not a value play. The key support level is $492 to $493, the 20-day SMA. As long as AMD holds above that level, the bull case remains intact. I would view any further pullback toward $490 to $495 as a buying opportunity for growth-oriented investors. And that is a wrap on today's top 5 stocks for June 16, 2026. To quickly recap, SoFi is our highest conviction buy with that RSI momentum and above-average volume breakout. AMD and Intel both showing healthy pullbacks on light volume within strong uptrends. Netflix is deeply oversold with a critical support zone at $75 to $76, watch that level closely. And UNH is testing a critical 200-day moving average inflection point. As always, none of this is financial advice. Do your own research, manage your risk, and never invest more than you can afford to lose. If you found this video valuable, please smash that like button, it truly helps the channel grow. Subscribe and hit the bell so you get our analysis every single day. Drop your thoughts on these stocks in the comments below, I read every single one. See you tomorrow.